The government shuts down and the market goes up because the market. Investor Beat starts now. Thanks for watching. I'm Alison Southwick. After taking a hit yesterday on the threat of a government shutdown, the market is clawing its way back up today as day one of the shutdown actually begins. Joining me now in studio is David Hanson and Mike Olsen. Our top story. Big day for the Affordable Care Act. The insurance marketplace at healthcare.gov launched today. The online exchange is a centerpiece of Obamacare, as well as at the center of much Capitol Hill drama lately. So, Mike, how much is the Affordable Care Act impacting how you are investing in healthcare?
Well, I think you have to acknowledge that this is a watershed act in terms of the effects it has on how healthcare is transacted in the states and the way businesses go about it. But broadly speaking, I think this really only accelerates the trend that we would have expected to see over the course of the next 10 to 20 years, which is that in attempts at curtailing the rate of cost inflation, and you can say whether or not you believe that, entirely different story, the government will be extracting profits from businesses that have made high margins historically.
So then, David, how about you? How are you investing amidst all of this?
It has not changed my investment outlook. I usually focus on banks and financials, but I do invest in other sectors. Full disclosure, I have not read the whole 906-page Affordable Care Act.
You're the only one who hasn't read it.
Most
read
people have read it. Yeah. Instead of reading that, I spend my time reading company 10Ks, reading about companies, learning about companies that are going to win over the next 5-10 years, and that Obamacare is really not going to impact their long-term potential.
So then, specifically, Mike, what are some companies that you're keeping an eye on?
Right. I think the companies that I'm keeping an eye on are those that A, have durable competitive advantages, and B, are most likely to benefit from the expansion of coverage. On the benefit from expansion of coverage and Modi end of the spectrum, I think the two largest managed care organizations, WellPoint and United Health, are ideally positioned to go ahead and provide great service to customers and increase their insured rolls. Market is pricing the stocks relatively cheap compared to that prospect. Another one that I really like, just because they're right at the intersection of some great demographic trends, have huge competitive advantage, and will benefit from increased consumption of pharmaceuticals, Express Scripts. We'll talk more about that later.
All right. Let's take a look at some of the day's movers and shakers. Shares of Walker and Dunlop hit a 52-week low today after the company lowered its outlook for Q3 loan origination. So, David, is Walker Dunlop alone here, or is this a problem across the industry?
It's a little bit of a problem across the industry. Walker and Dunlop, they're a multifamily commercial real estate lender, if you can get all of that in one sentence. So they originate these real estate loans and then turn around and sell those to Fannie Mae and Freddie Mac. And the reason they came out and said, hey, look, our originations are going to be much lower than what we thought, it's because Fannie and Freddie are reaching their cap. They can only take on so many loans. So it's kind of an industry-wide problem. This is the second time in the last couple of months that Walker & Dunlop's had a really bad day, down over 15% twice in the last couple of months. So it's a little bit of a company problem, a little bit of an industry problem. But the stock is very cheap right now. It trades at around 10 times earnings. So there's not a lot of optimism. This may be a buying opportunity.
All right. Merck is up today on the news that the company is cutting 8,500 jobs as it struggles to compete with lower cost competitors. So, Mike, when a company cuts 8,500 jobs, you would think that would be a bad sign, but the market liked it. So what is the good news here?
Right, so I think the headline is basically that Merck is cutting R&D staff to refocus its efforts on higher return endeavors and really just kind of become a more streamlined organization. I think the subtext is kind of a theme that's really been endemic in the pharmaceutical industry for the past several years, which is that a lot of these companies are shifting their focus from big ticket drug development to become more marketing and distribution organizations. A lot of these pharmaceutical firms function like private equity firms. They license with smaller biotechs, they will acquire drugs, or they will go ahead and sort of participate in more of a passive way. This represents just a continuation of that. They're cutting R&D staff.
Zillow is up today. When asked about how the company will be hit amidst the slowing real estate market, the CEO responded that Zillow is a media company and not a broker. So, David, is that really enough to insulate Zillow here, or is a downturn in housing going to really have an effect on them?
Well, I guess the question he got was about a downturn in housing. I don't know where people are seeing a downturn in housing. We saw Case-Shiller numbers up over 12% year over year in housing prices, so that's pretty good. Zillow, as a stock, it's been on a huge run in 2013. The last month or so, it's down around 10% after some people came out with some research saying looks like they're spending a little too much money on marketing and other expenses. Some insiders are selling, so there were some concerns there. But if you're a long-term Zillow shareholder, you believe in that model, this is just a bump in the road.
Penney is edging up today. Crazy news, I know. Penney is up. The stock hit a 13-year low on Monday after hedge fund manager Richard Perry reduced his stake in the company, selling off 9 million shares. So, Mike, with the stock edging up, it seems that it's finally at a price for some value investors. But how masochistic are these investors?
This is the dead cat bounce. So Richard Perry, in the ongoing sort of boardroom struggle at Penney, who's a bit of a polarizing figure. But what we're really seeing here is Penney, they issued shares that would have diluted existing shareholders to the tune of 40% yesterday. Now we're just seeing a little bit of a bounce on that. Reality is, the reason they issued shares is because they're burning cash so quickly they can't pay for their inventory. It's not a good sign.
It's not a good sign. It's a very bad sign. But I guess there are some people who are slightly optimistic.
Yeah, I don't know.
God love them.
I'm getting my khaki somewhere else, sorry.
So that's going to do it for today. Let's take a look ahead. What is one stock on your radar, David?
One stock that I recently put on my radar is Panera, and I usually look at financials, like I said earlier. I usually do not invest in companies like Panera, these high-priced retail food companies. But Panera has been down around 7% over the past year. It's starting to get to a point where I'm wondering, is the growth that this company may see not being appropriately priced in the market? Is there long-term potential for Panera? So it's on my radar. Not saying I'm going out and buying it today, but it's worth more digging into.
Mike, how about you? What are you looking at?
I'm looking at Express Scripts. Shares have gotten hit recent. Investors are a bit concerned. Some that the rollout of the exchange is going to marginalize their position. Others that Obamacare being on the rocks, they might not grow as they otherwise would. The reality is they're in a sweet spot when you think about healthcare from a structural and secular perspective. They negotiate pricing of drugs on behalf of people, you and me. So they go ahead and they sit between insurers, the drug manufacturers, and pharmacies. They go and say to them, look, we represent the largest pool of insured individuals in the country. And so what do? They get lower costs for drugs on behalf of us. When you think about what folks are trying to do with healthcare, reduce cost inflation, that's a good thing. So at about 12 times cash flow, I like that.
You like that? That sounds good. Well, for Mike Olsen and David Hanson, I'm Alison Southwick. Thanks for watching.